right, trade pros, good morning. Have yourself, or hope you're having yourself a fantastic day. So far, we got a few things to talk about today on their morning market update. It's going to be a more brief one this morning because we don't really have as many updates. The market is more so waiting in a consolidation mode, and there's some pretty big news coming out today in energy markets and the stock market as a whole. All right, you can expect some volatility in the afternoon. Morning, Pele. And we're on YouTube as well. AZ, Lee, Naren, Pele, obviously. Good morning, you guys. All right, let's talk about the Fed. First and foremost, nobody really expects a decision or any kind of policy shift to be made from the Federal Reserve today. They're having their meeting at 2 p.m. And then they are having a press conference at 2:30 where Jerome Powell will answer some questions and be grilled for about an hour. All right. So that's happening today. Very, very important event in the market. If you guys understand why the markets rallied so much off of these coronavirus lows, it's all in pretty much the Fed and the stimulus provided by Congress. So the Fed has a very important role in the Federal Reserve. They had since about 2009, since their TARP, Troubled Asset Relief Package, came out in 2009. All right, they've been a staple pushing markets higher and a big driver for the gains we've seen since then. All right, nobody knows, well, not many people know this, but since the Feds entered the market in 2009, they haven't really left. They've constantly provided stimulus. All right, so I don't think they do any policy decisions, but there are going to be some really big scrutiny lenses looking through these statements and then the press conference. Here's what we're looking for as traders. Any hint of taking the foot off the pedal could really push the risk sentiment lower, meaning that, hey, look, we've done our part. If the Fed says we've done a lot, we've helped the markets recover. Now we're going to look to tail off some of the stimulus. I think that's the least likely to happen. I think they should do that, but I don't think it's going to happen. All right, what if the Fed raised rates? Technically, the market's up. Things should be hunky-dory again, so they should be making a move to exit stimulus. That ain't going to happen. All right, I think we're going to have stimulus for the rest of our lives. We're going to die with interest rates at 0.5%. Look at Japan. All right, it's just a reality. So no big decisions are expected out of the Fed today, but it's going to be interesting to see if there's any hawkishness or dovishness. I think most people are pricing in more stimulus, and more stimulus would be more bullish or positive for equities. All right, any signs of them curtailing or pulling back on stimulus, equities are going to hate that idea and dump. All right, those are the two things that could happen. Other things to keep a lookout on is yield curve control. That's a whole different mechanism. Again, the Fed's just taking a page out of the Bank of Japan's playbook on stimulus. So they did that in 2016. It's not a unique idea for yield curve control. All right, YCC, as they call it, is a new idea that instead of just buying the front month bonds on a specific stimulus or these quantitative easing packages work like this. I'm going to buy $60 billion worth of bonds overnight, meaning that you're providing short-term liquidity to banks. Yield curve control means I'm going to buy as many bonds as necessary in the 3, 5, and 10 year, because that's the part of the yield curve you want to control. 30 year as well, depends on what you want to target. I'm going to buy as many bonds as I need to maintain a 109 spot 30 price, for example. All right, and so there is no quantity number. It's unlimited, and they're going to continue to buy it as long as it takes to buy out all the demand to set the price or fix it at this level. It's price fixing is what it is. They're printing enormous amounts of money and circulating in the economy. All right, because why the hell would you sell a bond for anything less to a friend or to somebody else in the marketplace where you could sell it to the Fed at their offer? All right, and so that's the thing. All right, at their bid, rather, I apologize. That's the thing about all this is that we don't know what's going to happen, but if they talk about yield curve control, it's another form of quantitative easing. It's another form of stimulus. The market will like it. All right, also look for the Fed to talk about their forward guidance at 2 p.m. today. They are going to release their first economic report ever. Sorry, not ever. It's a little dramatic. Ever. The first economic report in 2020, they had a March meeting, but they didn't have an economic projection because we're in the smack dab in the middle of this pandemic. It's hard to have an economic projection. We don't really know how bad this virus situation is. And so they skipped it, but they're going to have another one for the rest of the year. So look out for that. It's going to be interesting to see what the Fed thinks the economy is going to look like in the next couple quarters and for the rest of 2020. All right. And has the coronavirus passed? Those are the big questions. So that's the big if moment in the market. Depends what's going to happen here. I can't give you an outlook or sentiment because I don't really know. I think all traders are going to be waiting for that event. So I think this morning you're going to see range bound trading, unfortunately. All right, you can see some more range bound opportunities, slower movement, less magnitude, less price swings, less volatility, less fluctuation, less opportunity in the morning session. Afternoon, I think we're going to pick it up. All right, in today's markets, in Japan, we're up 0.2%. Hong Kong's flat. China's down 0.4%. India's up 1%. In Europe, at midday, London's down 0.3. Paris is down the same. Frankfurt down double that, down 0.6. And in the U.S., Dow down 0.4. S&P down 0.2%. Nasdaq actually up. Nasdaq's on a freaking roll and broke 10,000 for the first time ever yesterday, and it's holding above it. 10,047 quarter at the moment bid, half offer. All right, so that's it. Crude oil is down 2.8% this morning. It has recouped slightly, but not that much. All right, trading the 38.38 at this point, and it has recouped quite a bit, around 50, 60 cents off of the overnight lows. All right. If there isn't any volatility this morning in equities at 10:30, you are going to have an opportunity for volatility in crude oil. It is the inventory report today, where in 1 hour of one day you could make your whole weekly income. It moves a ton when it's a good report. Even when it's not a good report, there's a lot of opportunity in oil. So it's a good time to learn how to trade that. So come check it out. All right, in other news this morning, 7 a.m. we had mortgage applications, the NBA mortgage apps, and that's the 30-year mortgage rate's gone up to 3.38 from 3.37. So, the cost of borrowing is increasing, even though the Fed's keeping rates low, because banks have to compensate for the additional risk, is what they tell you, but they got to make some money too. All right. The refinance index, 35.29 versus 31.66. A lot of people are starting to refinance. It's picking up on a week over week basis, but also mortgage applications are picking up. 9.3% increase for the week ending today. All right, that's amazing. That's a 9.3% increase. Big jump in mortgage applications. I think people are back on the market, feeling out risk on positions in the real estate sector. All right. CPI also came out today. That's the cost of goods, consumer price index. It's also an inflationary reading. All right. And we got a reading of minus 1/10 on the core number versus a minus 3/10 low expected projection, which means that this is a deflationary report. Inflation is less. This is what's pushed gold higher in the last little bit. All the stimulus, the reason it pushes gold up is people expect inflation. We're not seeing inflation. Be very careful on gold. We're seeing deflation now, 0.1%, and then U.S. CPI year over year is also just barely positive. It came out at 0.1% for the year. All right, so that's not a good look. I mean, I think the Fed's going to be asked about that this afternoon. Mark my words, Jerome Powell will be asked. It'll be interesting to see what he says about that. All right, because all this money they're stimulating and printing and putting into the economy should theoretically be raising prices, but it's only raising the prices of assets, paper assets like stocks. All right. 10:30, we have crude oil. 2 p.m., we have the FOMC announcement. 2:30, Fed chairman press conference, and that's it. That's all we got for a damn. That's all. That's a huge day. Today was an important day of the week. Keep an eye out on that. Good luck. Good trading, guys. Be careful out there. Ton of opportunity for today's session. I think just the morning's going to start out slower. And if we could deal with that and stay patient long enough, we'll find the opportunities regardless. They'll present themselves to us. All right. So that's what we got. Naren and Tony, I don't know when there's going to be a crash. A lot of people are predicting another crash, and that's why the market's going up. All right. Some point when everyone predicting a crash buys the market, then it's going to crash. I'm going to caution you guys trying to predict things. Just read the real time. You don't have to predict. Predicting's for the ego. Trading in the real time's for the money. You don't really need to know where something's going to make money. That's the beauty of what we do. So I don't really know. Maybe there's a crash. Maybe there isn't. Whatever happens, we're going to ride it, make some dough. And that's all that matters. Love you guys. Be good out there. All right. Be kind to one another. Have a great rest of your day. Manage that risk tracker trade pro. Catch you tomorrow. Take care. Bye. All right. Box seats your day today. We got oil coming up. A lot of opportunity.